All right. No musical intros and stuff on this one. First live podcast or live session on the channel. New to this, so you guys gotta bear with me as I work through all the things it takes to start doing this kind of stuff. But anyway, hopefully you guys saw the video that I did on trading with the politicians, and I used a politician by the name of Susan Del Bonet. That's in the normal discussions playlist. That was from last night, just talking about some of the things that she did. So I figured what I'd do is I'm kind of going to go down this rabbit hole of looking at politicians, because one of the things that we really need to start doing is following the money. Okay. So, of course, all of this is right off the top. None of this is scripted. Everything that you see me doing on this series with these politicians is just going to be boom. We're just throwing it out there, and we're just going to be just jumping in and doing deep dives. I think the good thing about doing it this way is we can do the analysis together, we can trade together, we can find opportunities, and we can learn together. Okay, we can learn, we can see what's going on with them. And there's going to be a perfect example on this Josh Gottenheimer, Democrat. You see, he's 52 million in the market. His net worth is probably worth a lot more than that. I'm not going to jump into that. Pretty young dude too, 1975. So he's 50 years. He'll be 51 years old on March 8th. So 23, almost 2,400 trades. So dude's really been in his bag. He is a very frequent and aggressive trader, just looking at this part of his profile. And of course, when you're talking about politicians, the federal law stipulates that they publish all of their trades in the financial market. That's where you see a publication date. And there's various sources that you can go around to follow and find what the politicians are trading. It has to be public information. That's why you see stuff like this. So for us, we're just going to start going through some of these. I don't know how long these lives are going to take. I think it's 5:30 a.m. Pacific Standard Time. I probably got a good hour and a half to burn. I'll probably be on till about 7 if I make it that far, or unless something happens or whatever, but we'll find out. So, and we're just going to start from the top. And, whatever they did, I'm going to just be taking a look at that. So if we see what is this called? ISRG, and he sold it, I want to know why he sold that. It was potentially a $15,000 position, and he did that on January 28th. So almost a month ago, he closed his position on Intuitive Surgical. Let's try to go find out why. So this is what we're going to be doing. Sorry about the long intro and the talk, but hey, if I'm not mistaken, this is live. So he sold his position. Oh, by the way, we're in pre-market. He sold on January 28th. I try to go find out what they did and when they did it and why. And knowing this guy, it's usually very, very precise. So me seeing that Friday the 24th, if you look at the date in the bottom, Friday the 24th, that's when he sold. Okay. And this dude is so precise. He sold at the top of the move. Oh my God. He sold at the top of the move. And he did it. He was so precise when it was RSI was overbought. Like, this guy's a genius. Whoever he's working with, I don't know if it's him or somebody else, but they are super sharp. Let's say if I'm just going to do some regular technical, just look at what happened and see why, and then I'll talk about where he might be going next, because he'll probably spin the block and come back around. But this is an expensive stock. It's he got out at right around, he got out a little bit over $600. He sold $610. And I'm just trying to see if it makes sense, if he was too early or too late. Well, obviously he wasn't late, because this guy, looking at him so far, he's never late. Okay, this is amazing. And he obviously, and this is my second example for this on this Josh guy. If you need to, for us, go take a look at the A to B is equal to CD pattern training. And this is what we're doing right now is being able to edify on something like the A to B is equal to CD pattern, harmonic, the A to B is equal to CD, equal measure move. That's why you saw me take A and B and clone it, right? This would have been A. Get it together, dude. This would have been A. Get it together. What is going on? This would have been A. If we can type, we can get somewhere in life. This would have been B. If we can type, we'll get somewhere in life. Simple stuff. If I can't do the simple stuff, we won't make any money. D. All right, so A to B is equal to C and D pattern. And this dude exits at D on the dot. That was amazing. To be honest with you people, it does not get any better than that. And then you just wait for the next setup, because he's smart enough to not go through this correction as it corrects. But he's smart enough to know that he's coming back in. This dude is a beast. He's smart enough to know he's coming back in at 551. And as you can see, the correction coming back down. It'll be oversold in a little bit down here because this is trending. See this? This is trending. So for that part, you want to go follow the video that I have on just understanding how the market moves. Okay. And then you got a little box of consolidation here. This is a lot of the stuff you'll start to see. It's a lot more simple than a lot of the gurus and stuff out there try to make it seem. The market is either trending, it's either moving bullish, bearish, or sideways. And even when it's moving sideways, remember, I'm going to be using these opportunities to teach and train too. But even when the market is moving sideways, it's still paying off. Okay, this is what no one is telling you guys. Even when it's moving sideways, it's still creating advanced patterns. That's an advanced Gartley pattern for a person who's like a day trader, not even a swing trader. The big one would have been a swing trade on the daily chart, riding that out. But even a trader who would have been looking at this consolidation and saying, hey, I know that an advanced pattern is going to form for me, then he would have entered there and just killed that little Gartley pattern there. See what I mean? So you got a Gartley pattern, then you got another setup of Gartley pattern principles. A to B is equal to CD pattern. It's basically the right side A, B, C, D of the Gartley pattern. And then, of course, at D, you get the reaction on the Gartley pattern. On the A to B is equal to CD pattern. D, overbought in that case, extremely over 80. Remember, we use extreme conditions. And then rolls over as it should. This worked exactly as it should. And this guy, I can't say enough about what I've seen with him in just a couple of short trades. The next thing that I would do for him is come in just a little bit closer off the daily to the 4 hour and see if there was another if what we saw here was a reaction to another advanced pattern. Probably not, though. This is just a failed retest. It wanted to just try again to reach this price action over here, right? So there's always going to be another retest. People, like I said, we got to start simplifying this stuff. The market just does certain little simple things. So failed retest, and this is amazing. This is amazing. So the one thing I do know that he did miss is, let me try this one more time. I wonder if I got to let me come a little bit closer, because I think I see something. Remember, this is about having a trained reticular. So let me see, because this, I think, let me try one more time, because I think, well, the price action is way up here. Then he comes down here. So it's only 30. Okay. But okay. Anyway, you see, you guys can see I was looking for Cypher, and it's not there. It's not there. Cypher and the reaction to it. But if I go over to BAT and I try to validate BAT, what do we end up with? That's 55, huh? 55. And did we get 38 here? Yeah. Okay. And then did we get 886? No, we didn't. It would have been way up here. 886. Right here. Okay. Anyway, so it couldn't even complete the BAT pattern. That's fine. Fair enough. But anyway, that's that kind of handles it for that part. He smart and got out the way. He's smart. Like, whoever is working for him and giving him his signals, I am so impressed with them. Yeah, whoever's working with Josh is just really, really good. And like I said, they're tracking this. His advisor is tracking this for him, and they're going to look for the correction back down to which is now the structure. It could be here. It could be, since it's trending so hard. This could be the new structure right here. These two, that could be, because you got to come down. Yeah, I think that's it. I don't think you'll see correction to B. So retest this structure down here, which is about 38%. So we'll grab the fib and we'll just measure it to just be sure. And we, like I said, our eyes are pretty sharp. We know that that's like a 382 retracement, and you get like small little 382 retracements like that. 382. Let's go a little bit further, maybe 50%. Okay, so yeah, this is 50%. So it comes up 50%. Okay, unless it's already. You know what? I gotta clean this up some. I gotta clean this up. All right, so correct back into this area, and then he'll be looking to take one more shot around here. I'm surprised that he didn't already do it and open that position. We might see something come out that says that he already came back in, but there could be just an issue. There could be an issue with price action breaking above 617 because it's pretty expensive stock. So can't really do too much more with this one without a break and close above that 613, 614, I think it is, 615. Without the break and close above 615, there's really no telling. But again, there is a chance that when he got out and price action corrected here, as long as they got a 382.50, they probably wanted 618, but that's fine. So you got price action down to 50%, and then you gotta just a quick little retest in here. You got see this little V in here. You got a quick little retest in there, and that's good. And that's what they wanted probably. They wanted, so entering right here, entering at 566 again. Now here's the thing: the 566 entry was the whole reason that was there was to project the target up here, and then he would exit again. That's if he's in. I got a feeling he's in there. So this would be the next target at 649, and then oh my God, this is pretty dope. And then that would be the extension off of this right side here. See this double bottom here? Okay, because there was another one of those. Let me tell you guys a story real quick. Okay, you see how we got that double bottom and then that fire off? He's trying to do the same thing right here, double bottom and fire off. So when you got the double bottom here and it came up, watch the same thing happen, right? So you get the double bottom and then you get price action coming to retest this area here, right? Okay. You get price action, retest that, and then what do you see? You see it rejected just a little bit and it comes back down. Same thing here. Price action comes, the same thing, double bottom. Okay, and he's trying to go get this. The same exact thing happened. Comes back down here, okay? Where, of course, then that part, it took off and violated and broke and closed and established a high. So you can expect the same thing to happen here. Double bottom, break, come test that, get kicked back a little bit, and then he's going to come through it. And they know this, trust me, without a doubt, they know that this is going to happen. So now I have to clean up because I don't keep a whole bunch of, I don't trade on charts with a whole bunch of stuff on them. It's really not needed. So when you see these traders and these gurus out here with all this stuff on their charts, you need to tell them to stop. Tell them it's not necessary. So now looking at that correction, or if we went back to the last one, if we went back to the last one and he came up here and he got violated, that was how much? It was probably 50% as well. So this thing does a lot of 50s. It doesn't really care. Yeah, 50s. It doesn't really care about major stuff like 382s and 618s. It cares about 50s. So we're in the same area now. We're in the support zone for this one because he went up and he came. Here's the 382 right here. Here's the 382, 38% retracement back down. And then the next shot is to go and take this bad boy out. So this stock is a little too expensive for me. I'm not at the level where I'm buying shares at $600 a piece, but this guy, that's probably small change. And again, now that we've cleaned everything up, let's do this. Let's one more time. We're going to come off the pre-market, even though we still are in pre-market at 544. Let's come off of that and let's switch back over to the regular trading hours. So we know that right now, remember, coming up, pullback, right? And then A to B is equal to CD. So clone. He's gonna rinse and repeat and do the same thing. Trust me, he's an A to B is equal to CD trader. Okay, so he knows his target is right up here at 659. I can't see my chats. Let me see if I can turn the chats on. People might be chatting with me. I should have done that already. Anyway, let me go to YouTube and see. If it's on real quick. I just want to see if there's comments, if this live is even running. I don't even know what's going on. I just fired it off and started going. So, okay. 2 views and it says I'm live. And no, 2 views. No comments though. So, let me see. Viewing live control room. Let me see. I'm just trying to, this is my first time doing something like this. So like I said, you guys got to bear with me, but you guys are going to see a lot, learn a lot. We're going to have a lot of fun with this. So we know that he has a target of 659. It's okay that, that there was a rejection here that should have been expected. But for the sake of us, or who are you other rich retail traders out there, and I don't provide trading advice, trading signals, trade at your own risk. The Harmonic Trading Club is not responsible for anything you do in the financial markets. This is educational entertainment purposes only. But again, 382 retracement. We know that this is going to be an area to look to get long on because we went and reviewed and we pretty much know that. Only thing is we're on a 4-hour chart. So look for price action to use this area here, retest, but this time it's coming through it. And then also, turn the magnet off for a second. Also, that's going to be an extension off this one here. I guess I got to leave it on then. That's going to be an extension off this double bottom here. And it's going to be maybe like a 1414 extension off this low to high right here. Okay, yeah, exactly. 1414 on the dot. All right, for his target on the dot. So he knows this, trust me. He's okay with this slight little pullback. All right, cool. What else can we look at for him? Me, if you want to know, I would be looking. This is enough confirmation for me to get lucky to take a look at that and try to get up there with him. But no, I'm not taking positions on shares that are $600 a piece. So 3M, let's look at 3M. Like I said, we're going to be here. We're just going to be breaking this stuff down for as long as we can. That was a pretty good one. What'd you guys think about that last one? Let me know in the chat. What'd you guys think about that? This is not the room to come in and leave. I promise you that. If you're one of those people that runs and jumps around, this is not, I promise you, with the information that's in front of you. I'm breaking down multi-million-dollar politicians. Go look at this guy's net worth. He's got 52 million in the market and I'm breaking down his trades. This is not the room to come into and leave. I promise you it's not. Especially breaking down what he does harmonically. So oh, what did he do? Let me see what the last thing was. He bought those on January 29th. He bought 3M on January 29th. We want to know why. So we want to go to January 29th and see when and why. And these are affordable. So let's see what's here. January 29th. January 29th. That looks like that's over here somewhere. Okay, so he bought it right over here. Let me come down a little bit. I'm just telling you guys, like the video, subscribe to the channel, give me a thumbs up. Where's the 29th at? 27, 28, 29. He bought right here. 28, 29. Okay, so he bought right here. Oops. He bought right here. All right. But now, and doesn't look like he's exited. So he bought, and then price action came up for him, came down. He wasn't happy about that. Came up and came down. Okay, so let's see what that means. That he bought at 150 something and it's down. Oh, how much did he spend? How much did he spend? 15K. So it looks like he spends about $15,000 per contract. And if you notice, they're all the same amount because he understands. He just understands how to deal with risk. He understands how to manage how much he's spending per trade. Now, I will say that there was no reason for him to enter right there. Now, in that case, that was not good advice. With it being he bought this, you're looking at it with your own eyes. He bought this when it was already overbought and rolling over. That's not good. So that's the first time that I have to say, okay, so that at that point, he did not get the correct advice on entry. Okay. Now I'll come back. I got to spin the block and say this. Now watch how what we would have told him. Well, we would have looked at that structure that began there and we would have come up to the top here. And we would have brought on the 618 here. Okay, so we would have said from the beginning here, this low to this high, 618, 618 back. And now watch the difference. But he's going to be okay because he's got the money, but he did not have to suffer through that drawdown that he just went through. He did not have to. The entry was incorrect. He should have been trading this Gartley pattern here. And it was forming too. And it happened, and we'll talk about it real quick. So this is where his advisor did him wrong. Now, this Gartley pattern is struggling too. It's not necessarily a home run, but it would have been better for him to take this opportunity entering at 146. He bought too high. Remember, buy low, sell high. It would have been better for him to say, okay, let's take this trade. Okay, not the one that he took, which didn't mean anything. Okay, so this is the trade that he should have been in. And if that lost, then okay, he would have lost a few dollars, no big deal. And if this is something he's doing long term, that's a whole completely different story. But this box of consolidation here, it's crazy that there was a breakout, but it's kind of hard to say if this is 3M. This company's going to be here for a while, but I'm pretty sure that they would have wanted this to hold. I got one more thing to say about this, and that is basically this double bottom looking structure here is going to send us back into the 2618 technique, where you got a double bottom followed by a break and close beyond previous structure. And in the 2618 trade, you get a 618 retracement, which means that would have been an even worse entry than I thought. Let me get rid of the profit loss tool and the fibs. I'll leave the Gartley up there. But really what was supposed to happen is his advisor should have been looking at from this breakout here. What they should have been doing is a 618 retracement off that. And that would have given him probably the entry that's a lot more likely. And that would have been price action falling back down, correcting 61% or somewhere in that range. I'll bring on the 32 and the 50 as well. We can see that the structure is right around here. The structure was created here. Okay, see it? That's the structure. So that's where you can look for the correction back into, which is what we see happening. Not quite oversold yet. So this is more like it right here, somewhere around 50%. Okay, around a 50% retracement. Could be as far as could be as low as a 618. But 618 would be kind of low in this case, so no, not after that. But then he would have been entering right here, entering at around 140. We're only at 145. It's $5 right there, and taking his shot out of that. So, and the retest here that high, and the next target. I should set up the real targets. There's no trade yet, but I will come back and keep my eyes on this. If there's an opportunity for me to get this at 140, my eyes are going to get big. but your entries have to be right. You don't just jump in a trade anywhere. Okay, so if you get anything from this video, that's what I want you to get from it. And that's going to be, of course, a 1414 extension off this low to high here. So low to high, come back, and then 1414, in between 1414 and 1618. I don't need 127. I'll take it off. So see, this is the target zone. Somewhere in here is where he should have been looking to exit. So I'm surprised that his advisor let him enter this trade right here on the 29th. That was pretty bad. Yeah, that was pretty bad. When this is what it should have looked like. It should have looked like this. But anyway, they'll get it together. All right. And for us, I'm just going to be jotting that down. I'll be looking at 3M. I'll be looking for the correction, outside return, pullback, retracement, whatever you want to call it. I'll be looking at that for 3M. All right. Cool. What's this? My guy. What's your name, by the way? Oh, okay. So Sean Blakely. I didn't want to screw your name up. It's Trey Hampton. And thanks for following. I see you been following a lot and supporting the channel. I really appreciate you. Make sure you start bringing your friends over. As you can see, it doesn't get any better than how we do it over here. I hope that you're learning. I hope you are following along on the playlist. I hope that I'm providing value to you and the rest of the viewers. Any questions you got, I don't care what it is, feel free to drop them at any time. We'll come on and we'll do breakdowns like this. So I appreciate you for jumping in here. I had to look to the right and see that the chat was open. This is my first time doing this. So go get some people and bring them in. You know, sorry, yeah, we're gonna have a lot of fun here, and quite frankly, I think there's potential to make a lot of money. You know, especially on like this one here. You see the setup that we're working on right now for 3M. I'm telling you, if that thing does what I projected that it does, I'm gonna take my shot, absolutely. So, and you see, we get to break this stuff down the right way. I showed you clearly how his advisor screwed him over and has him in a drawdown for no reason. I don't care how much money you got. It's about protecting your capital. All right. He bought into this, period, not up for discussion, when it was overbought and going to roll over, period. Right. And we can look at the potential places where it would have been better, which, listen, the Gartley's not going to hold it either. I don't care if it has a 70% win rate. It's probably not going to hold this time. What else we got? This is okay. So when he did ISRG, that was his. Oh no, he's been closing them. So if we go down the line, we'll probably see that he had been buying them. So now he's just closing those positions and taking those profit. Good job on that right there, because he really kicked butt on that. Microsoft, it's a boring one. I don't like talking about Microsoft, but I have done a few trades on it recently. Look, see, if you notice, a lot of stuff I pull up, if it's normal, look at it, I'm already ready. Tell me I'm not ahead of the game. I'm already ready. Microsoft setting up for an advanced butterfly pattern. Microsoft, in my opinion, should not be traded until $392. That is not advice. I am talking technical analysis. Okay, look at that. As soon as I flipped on Microsoft, I already had it. How do we know? Because you are inside of a gigantic box that is consolidating sidewards, and that's where your advanced patterns are formed. You tell me if I'm lying or tell me if I made that up. No, this is how it works. So look for price action to drop into here to fill this at 392. Let them finish dropping. There's no reason. It's not going up. It's coming down, right? Right. So you see some bearish divergence here, and then you're going to see another, hopefully when we get down here, you will see the bullish divergence. OK, but the price action, see how I have the divergence written out? The price action has to come down first, so that can be printed for us around that area. The bullish divergence, the butterfly will be filled and ready to go. And then that's the trade opportunity. So he did give us a trade opportunity for Microsoft, almost too pricey for most retail traders at $390. But you might, if you're just an average retail trader, a beginner, and you just don't have $800 to spend a few $1,000s to just go buy some Microsoft, then yeah, you might be better off just breaking that up into fractionals. But the opportunity is there. That's what we're interested in. See what he's doing. So he Microsoft. Oh, he sold his Microsoft on January 30th. Sorry, I missed the point. January. Look at this guy. He is phenomenal. He takes this ride from down here and he exits. Here's the 29th. Beautiful, beautiful. But he does. I don't even know if he goes for this. The next day. Oh, that's wonderful. He got out right here. That was beautiful. Yeah, so this is another one where his advisor was on point and kept him from going through that free fall. Kudos to them. What a team. What a team. That is beautiful. The people working for Josh, they are on their shit. There was just that one where they got him kind of snapped, but I'm sure they can figure it out. If they kind of like take the route that I did, said, hey, that was wrong. So, all right, come back. Trade's going to come back around, let it correct, do its thing. You come back. But yeah, they exited just in time to not get destroyed. And maybe they knew that. And they said, well, let price action come down. And they hopefully, I don't know, it looks like the person working for him might use structure analysis in the same way that I do, or might be a pattern trader like me. That was a beautiful exit for Microsoft. I got to give it to him. Okay. Microsoft. What else? GLW Cumming Incorporated. I should be looking at the company analytics and seeing some of these companies I haven't heard of. 3 of them I'm aware of. Intuitive Surgical, I don't. Corning, never heard of. But let me go look at them. The good thing about this is when you understand how the market works, you don't have to know that much. I mean, it's good to understand the fundamentals. Oh, this is something I've looked at before. That's amazing. I was like, damn, I'm looking like, well, damn, Trey, what haven't you looked at? Look at me. So I had projected that already. That's amazing. And I probably it was probably your classic, your same old A to B is equal to CD pattern, probably. At some point in time, you guys are going to fully believe and understand that that's how the market works, whether you like it, hate it, understand it or not, with a perfect completion at D. All right. So when I tell you guys this, I mean that when I say you can pick just some of these strategies and you can trade only them. You can say, hey, I don't trade anything but A to B is equal to CD patterns. You really could, to be honest with you. And then so this is the both opportunities. The exit for the trader who was trading the trend, knowing that this was going to be D. This is beautiful. And this is also the entry for traders to get short, as he was overbought, as he should be, with bearish divergence, setting up the rollover because the pattern has been completed. I don't think that's up for debate. You guys tell me. How much is hard to say. Typically on a correction like that, it's usually somewhere in between 38% and 61%. So corrected, perfect A to B is equal to CD with no drawdown either, just like leaving D and just working to perfection without worrying about a thing in the world. And then a trader could have got short. And then, trying to take this thing down $43, maybe even as low as $36. It's usually, when you're really trending, you don't really see the deep 618s. You see like 380, somewhere between 382 and 50. So expecting this to drop in here. And what did he do on that anyway? They bought it on January 29th. So let's see what that was all about. January 29th. Okay. That's wrong. Okay. Now that's error number 2. Error number 2 for his team. Let me just come back a little bit. There was no buy for this on January 29th, and I'm going to prove that to you. Unfortunately, I have to do what I have to do. January 29th, he bought on a horrifically looking red day right here. That big red one is the buy. So he bought and then had to go through that, corrected back up, but only back to go retest that D fill some more, which it just wasn't going to happen, people. You got to understand that. I'm sorry. I'm actually not sorry. It wasn't going to happen. So his investor again entered him in a trade when it's correcting. I can't stand it. You got boom, boom, head and shoulders too. Retest, left shoulder, head, right shoulder, roll over. Like just completely dead to rights. They'll have to figure this one out. I'm not going to get into it, but I wanted to, that's not good. I'll say that to you. That's not good. You don't enter at the end of a pattern. You just don't. You can't. You cannot enter long at D. You enter short at D. or you should be selling and closing your position at D in this case. I need you to understand that that's not up for debate and that cannot be questioned. I need you to understand that. Okay. So even these people, they don't always get it right. And they got to make sure that they got the right people working for them to handling their money. This was a terrible entry on a trade that all it could do was roll over. They should have been letting this roll over. Let me come back out. And this is, or maybe, I don't know what they were doing, but you have to let this thing correct. And their entry was going to be in here. This was the entry when he could have put him in there with a stop right up under it. Say, if you come below, I could have did an ATR off of this little red wick, but if you come into this area, if you come down to $36, then you can take me out. But that was sad. This is probably one of the worst ones that I've seen. That was really, really bad. And I mean, bad. Embarrassing bad to have you're managing his, how much money? His $52 million, and you enter long at the end of a pattern. Terrible. All right, cool. And then for the sake of us, this is affordable. GLW is affordable, but us here following the Harmonic Trading Club and Harmonic Trading Academy know that we'll catch support here at the end of this correction. We can come up for a retest, and we know what the real target is. And we see the thing about us, we know that it matters. We know that the opportunity should look like this. Coming up, I'll put it at 50, right? We know what the target is because another A to B is equal to CD. We know that when the market is trending, it creates these A to B is equal to CD patterns. We know the target is right here. Okay. Simple as that, not up for debate. And we know that our stop would have been right up under it for a trade that looks like that. So we don't kill ourselves and go through horrific drawdowns like this. All right. So terrible. Josh, let me talk to your guy. Okay. Let me take over your account. How about that? And you won't go through stuff like that. All right. Dominion Energy. So energy stock, he bought it on January 15th, 15,000. Okay. So they got that part right. Their balance is he's not jumping all over the place. 15,000 here, 50 here, 100,000 here, load up. They're just keeping it. Boom, boom, boom. Same amount. I like that. That part is good. So some good stuff to say about his investor. He's done some wonderful things, but I saw in this video, there's a couple of screw ups. So let's go look at Dominion Energy. Let's go look at D real quick. What is it? 6 a.m. And at some point I got to go make my own money. If I see anything, but we're doing this, like I said, educational and entertainment purposes. He came in to Dominion Energy on January 15th. And let me come back a little bit. January 15th, just a few weeks ago. And let's see what they did. And let's see. Okay, affordable. So yeah, I'm surprised he bought that other stock that was like $600 and some because he likes to stay in the smaller ranges. It looks like $35 to $55, maybe $100 max. Things that I kind of like to play around in. But January 15th is, let me come out a little bit so we can see. January 15th, where are we? January 15th. So he came in right here. Oh, wait, let me see. Did he buy or sell? He bought it. Wait. Yeah, he bought it on January 15th. So long position on, give me an arrow, January 15th. Right here, this little green guy right here, right? This little red one, he bought right there. Okay. So he bought it right there, and then so let's look at what happened when he came in. He got a good ride and he gave it back. And he's probably still in there. Then a retest up there, then come back to the same level. So he wasn't happy about that. Then another third attempt, and then a slight little 382 pullback. And now it looks like it's going to break and close. So now he's happy. Okay. Because now he's breaking and closing up out of this zone here that was giving him hell. That it's 3 attempts. It took 3 attempts to get up out of that. Okay. So attempt number 1 rejected. Attempt number 2 rejected. You got to remember, you got to close up out. Right? Remember, you need a candle to close. Okay. So it's not about the wick. That don't mean anything. Boom. Come back. 3rd attempt wick. 3rd attempt. Okay. And then come back. And then finally. So what's happening is, let's just clean up and let's just back out, get the target and see if there's anything in here. So you're looking at from this, we're looking at this here, and we're going to use this. We're going to do the same thing because he is, this is a price action base. This is a price action slash pattern slash technical trader that he's trader that's investing for him. I can tell by the things that I'm looking at. So targets up here, they might be looking longer, but remember, he always exits A to B is equal to CD pattern. So coming in here, A to B is equal to CD. So let me just do this real quick. Just going to be A and it's going to be D. So we know he's going to exit because we've seen his investor manage his trades like that. We know they're exiting at 59 and they're absolutely going to exit at 59 because they know what's up there waiting is traffic. And they're not going to wait to fight through that just for a few more dollars. They're not. Trust me. Also, if they hang around, they're going to fuck around and find out something really bad. Excuse my language, but don't excuse it because what I said is absolutely real. Because if they hang in there, if they try to hang in there too long, right when it's time to exit 886, oh, that's beautiful. It's a bat pattern. So they would have, this is a perfect setup for them. It's perfect because there's absolutely going to be a reaction up there at their target. He's going to do the right thing and exit him at $59 like he's been doing every time one of these happen. But this time, the good thing about it is he kind of has to because that bat pattern is going to have something to say about all of this. So nothing in there for us to do because we just have to let this go and then we'll see what happens. This was, and it's energy too. So you got to also wait and see what happens with some of these energy stocks in terms of just his direction and, just being able to get up there. He'll get up there. All right, cool. What else? Nothing for us to do. If I see anything that we can do, I'm going to call it out. I'm definitely going to call it. If I see anything that we can do, definitely. Netflix, I don't really want to talk about Netflix. It's kind of crazy. But we have looked at Netflix and what do we have? Oh, it had that crazy. I think they had either some earnings or a price change or something like that. And then it created this horrific gap. I remember that from like last week or something like that. It was like a week or two ago. It created this horrific gap. So that kind of just like threw the traders off. And of course, that was bullshit, right? So you see the correction coming back on it as it should. That was just crap. It was kind of fake. So throw traders and technical traders off. I'll just come in. Let me see if there's if we can find some space to enter on it. Come to the hour. Okay, so some consolidation. I just don't feel like Netflix is a $1,000 stock. I just don't feel like Netflix is a $1,000 stock. So it's really kind of like hard to me to like really get behind, if that makes any sense to you guys. But we did find something, so let's talk about it, that fits what we do here. And that is actually going to be my favorite if he fits and works. So you come down here, barely. Okay, 42, and then come up here. How much? Perfect. Okay, setting up for advanced cipher. Okay, advanced cipher pattern with an entry here at long on Netflix at $75. I'm sorry, $975. I won't be doing that, but maybe for a retest back up here as high as far as I'm willing to go on it. That could happen this week. That could happen this week. Let me see exactly what happens. So, yeah, advanced cipher pattern and not too bad at all. It does fit in line with the, after this correction is over. But I wouldn't take a shot at it right now. I don't care. There's just too much trash. There's too much noise in the way. Probably need to let this cipher pattern come finish doing its thing, which is, like I said, right around here. Let this finish. I understand some traders are going to jump in and probably get themselves destroyed because he says he's oversold. You're going to see traders coming in and just getting their heads completely snapped off. Terrible. Let the cipher finish. Trust me, the market wants cipher. The market wants to complete the cipher, and the market more than likely is going to come complete the cipher pattern. All right, for an entry right here. You want to buy it lower anyway. You don't want to buy it 1,000 even. And there's nothing right there. There's nothing right there. The would-be bat pattern is probably not going to win. There's a bat pattern in the middle of it. Right here. You come down 50 right on the dot and come up and then boom. So that's got, and it being oversold, that's got, that's going to have a lot of traders thinking that they can come in there and do that. But trust me, the smart and strong and big money are going to control this, and this thing is going to come down to 975. Kind of, they know that this was nonsense. Trust me. They know that that gap was nonsense. This is crazy. So I'll leave it green. All right. So this is more like closer to the structure in which that started. And then that's where the action should come off. And this will be the last one, and we're going to get out of here. Because like I said, we can probably just come up and jump on this guy's stuff every day, all day. That was January 21st, $15,000 on January 21st, which was, where's January 21st at? Did you set this guy up again for a free fall? Okay, no, I'm on a 1 hour chart. Let me come out a little bit further. Where's January 21st at? Okay, beautiful work. Beautiful work. And was that a buy or sell on Netflix? Netflix, they sold. Okay. Wow. That's not good at all. They sold and exited their position before after the gap. Okay. So they rolled that. They got the profit and got out, but they could have got more. Okay. So they rolled, they got all of that, and then they got out. But after that crazy news catalyst breakout, it continued to go from 949 all the way up to 10. It went $100 more. I'm sorry, $1,000 more. So sorry, $100 more. Get it together, Trey. All right. So hopefully his investor is looking up here at this cipher pattern and going to set him up. Anybody messing around with the yellow smaller bat is probably going to get their heads taken off. It's going to try, but it's going to fake out and probably fail and go get the cipher for a better price. So like I said, how many did we do? 1, 2, 3, 4, 5, 6. We did 7. I think that's enough. He's got a lot more. I don't know. Maybe I'll come back around tomorrow morning's live, do this, or maybe even choose another politician. There's a list of all the wealthy investor politicians. Or maybe we'll just flip around and just look at our which is what I was going to do in the first place. Just go look at some of our stuff, because we have a whole lot of stuff on the line too. You know, SPY setting up for Cypher, but in the pre-market, kind of pushing up. So that's making some traders happy. If I switch over to the pre-market, pushing up a little bit, but turning around, that might be over. I don't know. I can't say for sure, but I know Cypher's there. And like I told you before, the market's going to want to go get Cypher. So I'm going to flip back over to, it's 6:17. The regular market's about to open in 15 minutes. And I don't care if price action pushed up right here. It's not going to bother me that much. I think that price action is going to come get Cypher. And then that's where the opportunity is. SPY, very, very expensive asset to invest in, but worth it, I can say, because just historically, what SPY does. Cypher, look at that beautiful Cypher reaction. Some sideways movement and then setting up the second one that you see me kind of like waiting for. It looks like it's going to get it too. We come back. Sometimes you got to come out. I don't understand why traders don't like to come out, but you got to come out some, and then that's what's going to allow you to see what's actually setting up. So this one looks like it's highly probable. Roll over, let the MA push this down, get oversold at this point at 595, and then that's where the action is. So we'll just run through our stuff real quick before we go. JP Morgan Chase, I'm not going to worry about. Amazon, Gartley structure. So you see me wrote out that structure. You see the previous reaction to the butterfly. You remember, so reaction to the butterfly for winning short. And then, of course, breaking through establishing some structure here, coming through that, what was the resistance at D, and then making it support, come up, support again. All right. In the form of a Gartley pattern. So looking to go ahead and do some more damage on Amazon, right? Retest A, and you guys kind of get the rest of it. Running extensions off of the X to A for targets 127, 127%, right? Target 2. So somewhere in that range, or maybe even as high as taking this whole move. So from after this correction here, extending from this part here to the A up here, and just bringing on the full spectrum, just bringing on a 1618 way up there. You could even see targets up here, $275. Nothing for Amazon. I think you, as long as things are okay for now, you can probably expect something like that to happen. Apple, what have we done on Apple? Apple's got a lot of stuff going on in there. So let's come back a little bit. Looking for Apple to set up and finish on A to B is equal to CD pattern, A, B, C, D. D would complete and form a Gartley pattern up here. Have to wait and see what happens. But in the meantime, let's just switch back over to we're still in pre-market. I got to go to pre-market to show you what we're looking at right now. And pre-market has given off a cipher pattern on the 1 hour chart. Traders really thought that, now a scalper could have lit that thing up. A scalper could have killed that from 242 to 245, that $3, but hopefully they got out. If they did enter a D, they would have had to get out because there's going to be a complex retest. Let me come back a little bit, just a little bit. See what I mean? When I tell you guys that, a lot of times you get that retest. Okay, this retest here is what's going to allow, this retest is going to allow the other traders, the other day traders to come in. All right. So that's definitely on the table. And the market's going to open pretty soon. Hopefully, because I want to take this trade on Apple. But, you got to give me my price. And a lot of people don't understand that your psychology has to be tight, solid, and intact. And you don't forego it for anything. You just don't. So this is a very, very good setup. It's cipher. I could probably take cipher all the way up and to complete the pattern, which is what I'm going to try to do to complete the overall A to B is equal to CD and Gartley up there. That'll set me up for a trade that looks like this. But I need price action to come and give me what I want. I won't take it unless it's what I want. I'm not going to just get uppity and jumpity and all that kind of stuff. Maybe something like that. Give me something like that where I'm not going to get my butt kicked on. All right. Apple, SMCI, probably want to take Super Micro off of here. I don't know. I might keep it. I don't know. But let me see. Let me just come back a little bit more the week, see what we're really working with. Okay. Not bad, Super Micro. Not bad. And that is a huge run. And I've had some positions on Super Micro with a gap. Okay, so all positive stuff on Super Micro. So this is something we definitely want to spin the block and come out and start looking for an entry on. I'm not going to do it here. I'm not going to take the time to do it here, but definitely need to come in and maybe when the market goes live, come in and take a look and see where this little correction is going to end at. And then, it's probably in front of me. But let me go regular, get off the pre-market extended. What happened? Was it rejected up there? It was rejected right there. You couldn't break and close above that. So we know what it's trying to do. We know that it's trying to break and close above that $64. Pretty likely. We need it to happen first, though. And if we want to get involved in it, we need an entry. Not to mention, this is probably reacting to A to B is equal to CD. Go figure, right? Like, what else is it going to react to? The end of that pattern. Yeah. So kind of, sort of. A little bit more. But it's really the structure here that is struggling with to break and close above this area here. That's what's happening. All right. No secrets. Okay. We would trade with no secrets. Everybody always wants to act like there's a secret. It's about structure. Okay. Structure. So it all that matters. Okay. Structure. Boom. Came resistance. You see that? Resistance came. Still fighting with it. You guys see that? Cannot break and close. above that area. All right. That's what he's trying to do. You got to let that happen. Nobody should be long on SMCI yet. If I see anybody talking about they're long on SMCI, I don't care if you're a scalper or whatever, I'm coming for you. It's ridiculous. It should not be happening. Got to get a break and close above that, and then allow it to push back into it, letting it be the structure. And then that's where your trade is. All right. Stop letting people fool us. Clean Spark probably. Oh, clean Spark I love because it's so harmonic. Look at this. Look at this. Bad, just everywhere. Bat winner, long bat winner, the bat winner, bat look combination in there. So the reason I like this one is because it continues to create advanced patterns over and over and over. And okay, pretty good. The company is not liking this free fall. If their asset drops down into $8 range, but I will, because it's setting up two things. The purple is shark, and then the yellow is butterfly. If that happens, we're on a 1 hour chart. If that happens today, I will take a shot out of that zone. Absolutely. But got to get down there first. Now, at this point, who doesn't believe that the market moves harmonically and creates harmonic patterns over and over and over again? If you don't believe that at this point with what I've been showing you, then you're just in denial, or I don't know. I mean, there's many different systems, but in my opinion, you need to incorporate advanced pattern recognition into your system. And as you can see, you do not need to pay for software, and you do not need a scanner. Your eyes will do it as long as you are willing to stick to the rules of engagement. All right, who is this guy here? Oh, Space Mobile. Space Mobile setting up. Not bad, not bad. Okay, and just to, kind of continue to hammer away. Look at that. Space Mobile advanced bat pattern, fire off, killer work. Okay, slow down, consolidate a little bit, and then while it's consolidating, go give us another opportunity harmonically. Okay, Gartley. Coming down to get us to, wouldn't you guys say? Inside of this sideways consolidation, right? Box that out, create that market. Let Mr. Gartley come give us an opportunity to come play around. Cheap stop that we can afford, $28, average trader, $100, 5 of them. Okay, well, close to $30. So 30 times $420. The average trader can trade this up out of there, or do an option on it and make even more if they could pay for the option. But coming down, not oversold yet, of course. And then going to fill this. There's absolutely going to be an opportunity to get long here. It's really not up for debate. And the other thing, remember the other video that I have out there, what's the name of it? Is price action random? No, price action is not random. You can call it an algorithm. You can call it whatever you want. The market is going to come fill this Gartley pattern, and there's going to be a reaction off of it. I would be surprised if this thing just turned around and ran away for nothing. That's not going to happen, because that's not how this thing works. You need to be oversold here on the RSI, showing bullish divergence before anything happens. And there's no sign that it's stopping. Even in pre-market, I think it might have dropped even more. Let me switch over real quick, see if we're closer on pre-market. Pre-market settings. Okay, kind of just sitting there in the pre-market. And then when the market opens, they're going to go get this thing. More than likely, I'll tell you. More than likely. So, all right. Time for me to get up and go take care of some other business. But hopefully, again, that there was value in this video. If nothing, there's a ton of advanced pattern recognition and harmonic pattern training in here. All right. Continue to support the channel. Sean, thanks for coming through. You can start looking for these to come on every day, somewhere between 5 to 6 a.m. So turn your notifications on. You should have your notifications on anyway for the type of stuff that has been coming off of this channel. Let's just do a review real quick before we go. Let's just go show you guys what's been happening real quick. So let's just jump over to the studio, because I want you guys to know what you're getting yourselves into. You want to go and look at this trading with the politicians one, because remember, this is pretty much an educational channel. But if I go to content, this is what you want to look for. You want to go to content. You want to go to playlists, and the Harmonic Trading Academy playlist for traders who are looking to learn. You want to start from the bottom right here, the easiest way to read a price chart, that's where you see me drawing the lines and stuff like that's really just pretty much the beginning, identifying like what am I looking at, what's going on here. And then from there we start to incorporate some of the techniques. We go into double top, double bottom. We go into the 2618 technique, which you see me talk about on this video. Then we start getting right into the advanced patterns. But you got to get that reading a price chart, trend, counter trend, sideways. You got to get that stuff down first, because then we go right into Fibonacci and we start deploying like real stuff. A to B is equal CD pattern, trend continuation opportunities, pullback, stuff like that. We get into double tops, double bottoms. The 2618, just as powerful as any harmonic pattern. Dominating with the bat pattern. You guys see how powerful it is. We go into Gartley. We go into Cypher. We go into Butterfly. We go into Crab. We talk about stops, targets, where, how to enter. We clean up everything. We giving you everything without any guru telling you to give him $10,000, or without sending you to a website, and without telling you to pay for, what's that thing called where you go in and you pay, and it's without paying for Discord. All right, we're going to do it right here and we're going to bring the retail trader up to where he or she needs to be with all the tools that you need. Even the stuff that I don't like. We're going to talk some MA stuff. We're going to talk some MACD stuff. We're going to do it all. Head and shoulders pattern. Go look at that video. You could say I only trade the head and shoulders pattern and become a completely different person. Thanks, bro, for everything. I started a prop firm, 100K. Those are beautiful, and I wish you the best of luck and success. I got some tips for you that I want to go over with you when you're talking about prop firms. Oh, you passed it in 4 days. Oh, you are amazing, and congratulations for that. So now you're funded over there. Use your psychology. That's what's going to get you through it, Sean. This is going to be all about your trade psychology and almost nothing else. Don't worry about the money. Don't worry about the capital. It's about managing those positions and managing your trades, getting in at the right price, getting out, setting your stop losses correctly. That's what it's going to be about. And as long as you can do that, you'll do excellent. But I was just kind of like going through the list of what's in the academy, the head and shoulders pattern. And then this video right here takes the cake, all the patterns. If you want to kind of like just jump to the, most of the people who are waiting for me to stand this channel up, this is what they were waiting for. They were waiting for the harmonic patterns. They didn't care about the rest of the stuff. They wanted the patterns. How to trade the pre and post markets, pretty dope, because a lot of people were asking about that. So I brought that out there for you. Things that you need, CTS score. You're going to have, Sean, a very tight CTS. Go look at the CTS video. Look at it a few times. Incorporate the combined technical scoring system into your system. You need it, absolutely, because you want to only take the best of the best, Sean. I promise you. If it's not there, you want to be able to confidently walk away and say, I'm not taking it. It doesn't have a high enough score for me. Okay. And then understanding RSI, which you see I deploy a lot of RSI. That's going to be my first thing is I need this to be overbought and oversold, and I need to see bullish or bearish divergence. I need that first before I start building on to the combined technical score. Is there an advanced pattern? Is there A to B is equal to CD? What does a higher time frame confirmation look like? Lower time frame confirmation look like? Do I see the same thing on multiple time frames? When I look left and I'm identifying structure and major or minor structure, do I have enough volume? Or is the volume low enough? All those things, you put that together and say, how do I score this trade? Is it scoring high enough for me? And then that's when you're going to take the trade. So if you say, I won't take a trade that has less than a 5 or 6 CTS score, then you don't take a trade that only has a 3 CTS score. All right. It's as simple as that. And just be patient with everything that you're doing. And I promise you, you'll be successful. I promise you. All right. That's all I got. Like I said, I'm just here to provide, value to the community and provide the education that people have been making us pay for decades. That ends that ended a few weeks ago. That ended about 30 days ago, as far as I'm concerned. most of the technical things have already been done. There's a few more trading techniques that we will be adding to the economy, and then the rest of the stuff will kind of just we're gonna start slowing down and come into more just like a comfort, just like a day to day, just understanding how the world works, just incorporating the things that are happening to the world with our trade ideas, and because this allows us to basically create content off of everything that happens and everything that we see. And that's everything in politics, almost every word that's mentioned. We can start, every event that happens in the world and in our country, we can take advantage of it. There's a monetary opportunity for us. And sometimes this happens inside of unfortunate incidents like major fires, hurricanes, these things that happen in the world. They unfortunately, we live in this capitalistic society, and when these things happen, unfortunately, they create opportunities for people with money to make money. When a place gets ravaged with a hurricane, that whole city is then wiped out. And guess who makes the money? Builders, home builders and developers and real estate people get to go make money. Your KB Homes and all your, DH Horton and these builders, they get to come rebuild a whole bunch of subdivisions for a whole city. It's what happens. And like I said, it's unfortunate, but that's the world we live in. When you see a war popping off, you got to start looking at these companies who make these weapons. That's the world we live in. When you saw the fires just happen in California, then that just brings another whole entire market to the platform. Somebody got mad at the video that I made and gave me a thumbs down on my how the Los Angeles fires will affect the stock market. And somebody was really disgusted that I would even talk about that. I'm an investor. I'm a real estate investor and I am a trader. What do you expect me to do? We don't have time for everybody's feelings. We can have time for people's feelings, but we got lives to live, and that doesn't mean that there's no sympathy in our decisions that we make. So now it's just turned into a sermon, and that's not what we're here for. You're here to learn how to trade. So I'll cut it short at that. Guys, just try to stay tuned. Make sure those notifications are up. Share this video. Even though we kind of like segued out of the trading, you can't tell me that this one is not packed with all sorts of education and information, even a couple of trade ideas as we were breaking down that politician $52 million in the market, Josh Schottenheimer. All right, cool. The Harmonic Trading Club. Hope you guys enjoy. Subscribe to the video, share the video, turn your notifications on, and give me a thumbs up. I appreciate you, and I'll see you guys on the next one.